Dear students, this is Lohit Ramesh, Assistant Professor of Commerce, Ashrimadan Shivayar Government First Grade College, Pavagada. Dear students, in this session, I want to discuss about the meaning of national income and the methods in which the national income is measured. Let us go with the meaning first. So here, the national income is the sum of all incomes, so in cash and kind, accruing to the factors of production in a given time. So it may be considered as a year. So here the income of which is arrived or accrued in cash and kind or in other ways. So it come in a year, but it's come from all the sectors which are there in an economy. So it is also the value of net outputs arising in several sectors of nation's productions. So that means every country or a nation have several sectors of production in which they are going to get the value for them. So it's a total value of the net outputs after deducting all those deductions from the total income. So that is arises in a year. So then it is also a sum of total of all consumers expenditure, government expenditure on goods and services, and net expenditure on capital goods. So consumers expenditures means the consumer who is going to consume so many kinds of goods and services, and the government also spends some amount on the people or it's for staff or for the for public service. Then the net expenditure on capital goods. So here net expenditure on capital goods means the capital goods are those goods which are used for long-term purpose with profit earning motto. So national income is the sum of all income which is arrived from the factors of production in a given time. So it may be a year or a given time. So it's called as national income. Let's go with the methods in which the national income can be measured. So the first method is that majorly it has three methods. One is product method, another one is expenditure method, and another one is income method. So let's go with one by one. The first method of measuring national income is product method. So here under product method, the production of all types of goods are estimated, so which are produced in a year, and they are valued at a market prices. So market prices means all those prices in which the products could be able to sell. So the net production of all the industries in the countries is added here in order to find out the income level through product methods. So here all the sectors are, it may be agriculture, industry, trade, and commercial activities. From all these, the net product value is going to be considered or counted to know the income from product method. So under product method, there are approaches are there. So that approaches are used to find the national income. That is, one is value added approach, another one is final goods approach. So under value added approach, so we can say that it's a summation of the increase in value to each separate production stage. So whenever the production is going on, the every separate production it's going to have a value. So that increased value of those separate production, that's total. It's going to be taken. Our summation is going to be taken, then which results in output in final form. So it gives the value of GNP, that is gross national product or national income. Then the final goods approach. So here the only final value of goods and services are added here. So they ignore the all intermediate transactions. So any income arises from other in between finalizing the goods and services. So the all kind of intermediate transactions will be ignored here. But the value of intermediate goods like raw materials, fuel, etc. are included in the value of final goods. So once after they are finalized, So then only the value of them final goods and services are added to the national income. So the two approaches are used here, that is value added approach and final goods approach. So in value added approach, they are going to consider the summation of increase in value at each separate production stage. So for every separate production, they are going to consider the summation of increased value. In final goods, only the final value of the goods and services are considered. Then so here we can see that categories of production under the product method. So that means under product method there are categories are there. So in order to find out the income from product method, so these categories are considered. So they are product of agriculture sector. So that means in agriculture sectors all the groceries which are produced by farmers, they are coming under the product of agriculture sectors. Then product of industrial sectors. So all those products which are produced and sold by industries, it may be a steel, cement, iron, or any plastic or anything which is produced by the industrial sector, and all those products comes under the industrial sector. And the products of trade. So that means while producing the goods and services, there may be a trading activities internally. So the income rising from that product of trade, so is also considered for calculating the income from the product method. Then the service sector. So here the service includes software, service of lawyer, doctor, police, or any professionals. So they all these services are considered in calculating the income from the product method. Then foreign trade. So under foreign trade, so the export and import value of goods and services are considered for the product method. So as a category, but here the export value is considered, but import value is going to be not considered or not counted. It's excluded here. Then indirect taxes and subsidies. So the indirect taxes is another source of income to the government here. So the the indirect taxes should be also considered as an income from income, because the people is going to buy number of goods and services. So through that they also are going to use with the indirect taxes, and the subsidies given by the government also considered as a category of production under production method. Then the second main method of measuring national income is the expenditure method. So it involves calculating the value of final goods which are consumed. So here, if the unsold stocks are bought by the producers, so if they are unsold and kept as a stock, then the producers will hold them as a inventories. So then they also there's some expenditure arises. Then the monetary value of the total nation production would be equal to the national expenditure. Let us see what are the categories of expenditure under expenditure method are considered. So that is personal consumption expenditure. So that means the people who want to incur some have some expenditure for personal uses, for buying of their own vehicles, motor car, uh, lorries, or any refrigeration, TV. So all these are for personal consumption expenditure. So that should be considered. Then gross domestic private investment. So that means privately they are going to invest in for personal purpose. So they it may be for purchasing of house or in stock market. So here the stock market value may not be considered, because the value may not be arrived at the right time. So it may be a late or it may be a negative one. So the housing on investment on housing is become an investment, it's not an expenditure. Then the government purchase of goods and services. Here the government also want to purchase a spend amount of money for payment of the salaries, buying of stationaries for its purpose, and for the welfare of their employees. So the government also have some expenditure. So this is also considered to calculate the expenditure and exclude from the national income. Then the net foreign investment. So if there is an investment uh, on foreign business activities. So this is also considered as a category of expenditure. So that means on in export and import. Then the income method. So under the income method, the expenditure made by the people of a country on goods and services which are produced in a country during a year become a income of the various factors. So here which are collaborated in the production of these goods and services which are, so that means so many factors which are collaborated with the goods and services which are produced in a year, and the income from the come from that goods and services will be called as the income. So but there are factors in income group also. They are grouped in as in following categories, that is wages and salaries. The people also who are going to have an employees, labors and pay the salaries. So it's also considered as an income. Then income of company business. So that means if the company is jointly having a business activities with one another, with one another, that means one firm to another firm. So there may be a possibility of a transactional income which come from economic activities, and the rental income. So that means the buildings, machineries, or some other fixed assets, they may be rented for the economic purpose or business purpose. The income also come from that. That's also considered for calculation of income. Then corporate profits. So that means if the companies are engaged with the professional business activities, that's also considered. Then income from the net interest. So if there is an interest arriving from after making investments, so then the income from net interest is also considered as one of the factor which is associated with the factor of producing goods and services. That means while producing the goods and services, the companies, they are going to borrow some money or take loans and advances from the banks or financial lenders. So here the banks and financial lenders also get some rate of interest. So it will be treated as income for them. So for that means for investors, so as well as bankers as well as money lenders. So it's also considered as an income. A corporate also, they are going to invest more and more for the sake of producing goods and services, and the profit arising from those is also considered as a income here. So after discussing all these things about the national income meaning and the methods in which the national income is measured, so we come to know that national income is important for development of economy and survival of economy as well as for growing up of economy. So and for the welfare of the people. So it includes calculation of income with the product produced and excluding the expenditure incurred for the public purpose, and income earned of a country or by on a country. So that means the income uh, raised by goods by producing and selling the goods and services with the associated factors in a given year. So all these are considered to measure the national income. So with this, I would like to conclude my session. Thank you.